Welcome back, everybody, to another episode of the Passive Income Lifestyle Series right here at Ashcroft Capital. I'm your host, Travis Watts, the Director of Investor Development. In today's episode, what we're talking about is how single family differs from commercial real estate, some pros and cons, and a few considerations for you. Disclaimers as always, never financial advice, not telling you or anyone what to do with your money. So please seek licensed financial advice when it comes to your own investing. With that top of mind, I just want to start by saying there's a big misconception out there in the industry and in the media for that matter, that real estate just gets lumped into this one big singular asset type. And the truth couldn't be further from it. You'll hear people say, I have X amount of my portfolio in stocks and X amount in real estate. But what does that even mean? So I spent about 6.5 years investing in single family real estate. And in the last 8 or 9 years, I've been full-time investing in commercial real estate. So in this episode, what I'm going to do is break down some similarities, some differences, some pros, some cons, and a few risks to consider. Let's get started. So first, a few similarities. So if we look at single family residential housing, and then we'll use multifamily apartment housing as our commercial example, they're both real estate. They're both private real estate. Okay, they're not an ETF or a mutual fund or something like that. So you're investing in tangible assets that you can touch and feel and see, and they serve a basic human need, which is the need for shelter. Now, second, they can both be investments. In fact, almost 100% of the time in the commercial space, it is an investment property. However, single family could be owner occupied or rented out. But either way, in terms of an investment, they can offer passive income or cash flow, potential equity upside, and tax advantages. Number 3, it's common in both single family and commercial for investors to place debt or leverage on a property. That simply means having a mortgage on the property. Now, that's debatably one of the greatest advantages to investing in real estate. However, there are risks, right? So if you put too much leverage on a property and things don't go as planned, you might find yourself in an even worse position than had you paid cash for the property. Now let's move on to 3 key differences between single family and commercial. And the first is that commercial doesn't have to entail residential, as I used in my previous example with multifamily apartments. Commercial real estate could mean industrial, it could mean office, it could mean car washes, it could be hotels, it could be self-storage, it could be raw land. There's a lot of different asset types that get coupled into the simple term of commercial real estate. Number 2 is the type of debt that gets placed on these asset types. So as we evaluate commercial deals, it's pretty common to have 5 to 7 year debt on these properties. That's considered long-term in the world of commercial. Whereas with single family, it's common to have a 15-year or a 30-year fixed rate mortgage. And number 3 is how these asset types are valued. In the commercial space, the primary driver is tied to how much income the property generates. And with single family homes, the primary valuation is tied to comps or comparable sales of nearby properties that are similar. So let's quickly evaluate 3 pros to investing in commercial real estate. And the first one is if you're investing in commercial real estate through a syndication or private placement, this is where limited partners pool their capital together with a bunch of others to buy larger properties, and then they defer the business plan to get executed by the general partner or the general partnership. This makes for a very hands-off investment if that happens to be your goal, freeing up your time, so to speak. With single family housing, even if you have a property manager, even if you buy a turnkey property that doesn't need any renovations, you are still active in many ways. There's a lot of decisions that you still have to make. What kind of debt or loan do you want to put on the property, if any? What kind of tenants do you want to have, and what do those qualifications look like? How much rent do you want to charge? Do you want to refinance or sell the property? At what point? And if you want to paint the property, who do you want to paint it? What color do you want to choose? So on and so forth. So it's not exactly a hands-off venture. And that was my experience. I had high hopes of just having ultimate passive income and zero management, but turns out I still had to make an awful lot of active decisions, and it actually kind of became a job over time. Number 2 pro to commercial real estate is the economy of scale. Think about renovating 400 units simultaneously on a property. That means that maybe you need 400 refrigerators and 400 smoke alarms and 400 door handles. Well, you better bet there's going to be some great discounts to be had when you're buying in such bulk, as compared to owning a couple single family homes where you've got to run to a local hardware store and pick up these items a la carte. And a third pro that's relevant to right now in the economy is that we're seeing price reductions in the commercial space, and that's largely due to having short-term debt and higher interest rates as the Fed has raised rates very aggressively throughout 2022 and 23. So we're not seeing the same kinds of discounts in single-family homes in most markets across the US because of what we talked about previously. 15 to 30-year long-term fixed rate debt means people are simply just holding on to their properties and their payments aren't going up because it's fixed rate debt as compared to floating or adjustable rate. So this is simply an opportunity for investors who are getting into commercial this year, moving into next year. Now let's quickly look at 3 pros to single family home investing. And the first one, debatably, I think it's the biggest, is you have complete control. You choose the property, you choose the location, you negotiate the purchase price. You can negotiate on many different closing items and seller credits and things like that. You get to choose your renters. You get to choose the business model and what you want to do with the property. So if you're someone that likes that kind of control, you want to be in the driver's seat, you've got a skill set for this and an upper hand advantage, by all means, this is a pro. Number 2, it's easier to invest locally. So if you love the market that you live in, if it's a growing and expanding market and you want to double down on that, this can be really lucrative. And this was kind of my case out in Colorado from 2010, 11, 12, 13, 14, 15. That's when I was doing a lot of single family activity. The market out there was just ripping and roaring. And so I was lucky and fortunate to be living in that market at that time. But unfortunately, all markets go through cycles, and that's not always going to be the case. So that's why I shifted a lot to commercial, where I could diversify a little more broadly. And number 3, managing your own properties or investing in single family homes can teach you a lot. It can teach you a lot of the fundamentals of real estate. It teaches people skills and team building skills and analysis and underwriting skills. So if your goal is to be a general partner or to be a professional in the real estate space and you want to be active, by all means, this can be a pro in terms of a starting approach. What I found over the years working in investor relations and investor education and development and going to conferences and workshops is most limited partners are not real estate people by trade or background. They're actually most commonly medical professionals, engineers, business owners, entrepreneurs. They're high net worth, high income individuals that are seeking diversification in their own investment portfolio. Now, as for the risks, I would say, to me, this is just my personal opinion, the number one risk in investing in single family or commercial is going to be the skill set of the operator. So for those doing single family homes, I'm talking about you and maybe a property management company if you choose to have one. And if you're a limited partner who's investing in a syndication, I'm talking about the general partnership. What's their track record? How successful have they been? What's their skill set? What is their upper hand advantage? I bet on the jockey over the horse. That's just my philosophy. And additionally, on the topic of risk, it's worth noting that there's a lot of risks that are outside our control. And this would be political risk and climate risk and natural disaster risk and tenant risk and population risk and interest rate risk and so on. So in recap, it really depends on how conservative you are or the group that you're working with is and what your risk tolerance is, because experience and skill set are necessary to be active in the real estate business. Now, as for which investment is best, that obviously depends on you. You know, I myself and thousands of others have found success on both sides. I made money in single family and I made money in commercial. And the reason that I choose to stick with commercial is because I find it much more simple and easy and scalable as an investor to do, let's say, dozens of limited partnership investments as compared to having to manage dozens of single family properties. And also, I really value diversification, and I find a lot of peace of mind in knowing that I have investments all across the United States in different markets, different asset types, different business plans, different debt structures with different operators. That helps to fulfill that goal of mine. So what about you? What are your goals? What is your skill set? And what is your desired outcome? Something to think about here for the week. You're listening to the Passive Income Lifestyle Series right here at Ashcroft Capital. If you have any questions or want to take a deeper dive, reach out, travis@ashcroftcapital.com. And to learn more about multifamily apartment investing and what we have going on here at Ashcroft Capital, you can visit ashcroftcapital.com. Until the next episode, stay safe out there. Have a great week, everyone. Truly appreciate you being here. Don't forget to like, share, and subscribe.